That's right. You guys give it up for Scott Brown.
Yay! Looks like a rock star.
Look at this guy. My God, with his blades on.
I know. Check it out.
What is
I'm
that?
in Arizona.
What?
Yeah. What's it like in Arizona?
I'm protecting my retinas.
Yeah. What's it like in Arizona right now? What's the weather like? What's it, about 103?
It's like 71 and not a cloud in the sky. It's gorgeous.
Yeah, you got to bring did you bring your clubs?
I did.
Yeah, good for you, boss. Look at you. How long are you out there?
Yeah, man. I'm going to be out here for a few days for an educational conference, and when nobody's looking, I'm going to go play golf.
A lot of good golf up there.
This is the guy who just spent a month in Colorado, right?
Yeah.
Hey, listen, I want to tell you about a bonus of being remote is you get to stare at Jack for like 5 minutes during the promos, and I don't know what you're eating, but it looks really good, and it's making me very hungry.
Apple, baby. Keeping it healthy.
Jack eats apples and almonds, non-salted almonds, by the way, because it isn't like living.
Oh, yeah. You don't want any salt.
I do want to keep living.
Yeah. Well, Scott Brown, obviously from Edgewater Family Wealth, has been coming on the show for It's Only Money now for quite a while and has been quite successful. Actually, we got a text this morning that the second March seminar is also booked now?
Yeah, so the March 20th seminar is booked solid. But the good news is we added a March 27th date at 11 a.m. at Ruth's Chris as well. So, the events are fun, Jim. I mean, we had a good group out. It's really a tight group. It's not a huge room, so it's beautiful that we can do what we need to do. We talk about what we need to talk about, but it's an intimate setting, so folks can really have a thoughtful conversation, ask good questions.
Yeah, Scott, and every day, read the news, read quite a bit of it. And one of the stories I actually have today is how people are kind of making it through this thing with inflation, how they're kind of dealing with rising prices and stuff. And I have found that, I am talking to more people who are really interested in engaging with someone like yourself to kind of set themselves up a little better, because I feel like with a lot of the things you watch politically that a lot of people don't know exactly what's going to be happening with their career. Of course, with AI coming around, nobody knows how their job is going to be affected. And I think now more than ever, younger people want to be prepared, especially if they don't have a company that maybe is helping them do that. People who are who are small business owners want more ideas of how to maximize the profits they're having and then take that money and have it work for them long term. So I think we're just kind of hitting at the right time with the right product, buddy.
Yeah, and what's funny is we give millennials, and I don't remember what the group after them is called, but
Zoomers.
whatever they're called. What are they called?
Zoomers.
Is that Gen? Oh yeah, Zoomers or Gen Zs?
Yeah.
Zoomers. So the Zoomers, and we give these people a lot of grief, but the reality is my experience with them is they're very conscientious about their money. They are thinking about it, I think, considerably more than, say, Gen X or the Boomers did. The Boomers and Gen X kind of figured it out a little bit later. They were preoccupied with other things, I suppose. But I find that this generation I think maybe coming through 2008 when they were young, when they were kids, coming through the crisis, through the Great Recession, made them aware that they should be more aware, if you will. So I am finding those conversations to be both numerous and thoughtful.
Yeah, if you think about it, I mean, Ross really represents that generation for me. When I look at people Ross's age, he's 34 years old, and he's really thinking about, especially with a kid on the way, thinking about how he is going to take care of himself 20, 30 years from now after his work career is over. And it's really refreshing to see people your age. My daughter is only 27 or 26, and she's going to get an appointment with you soon to do that very thing. And I would encourage every parent out there listening, if they have kids in that 18, 19, 20, 25, just getting a career, to get with somebody like Scott and begin now learning how to manage your money so that in 30 or 40 years, you don't really have to worry about anything. You can make decisions on your schedule. You don't have to wait to see what your job's going to do.
Well, I think it's an educational process, right? And like any educational process, it takes time. You don't just read a book or watch a YouTube and then suddenly become a financial genius. It takes time. People need to go through the trial and error. I did this, that didn't. People have to be okay with the error part, right? Everybody likes the trial and error process, except they're not real fond of the error part. So you have to give yourself time to go through trial and error. Don't make major mistakes. Don't do anything to blow yourself up, but try things. Okay, you think crypto's a thing. I may or may not agree with you, but give it a whirl, maybe a small whirl. Look at mutual funds, look at ETFs, look at stocks, look at whatever strikes your fancy. And over time, especially if you're in your 20s or your 30s, you have time to develop a process that works for you. Whereas a lot of people want to develop a process in 15 minutes watching a video.
Right.
That eventually blows up pretty quickly.
Yeah, and I think I talked to my son about this. I believe one of the biggest one of the biggest injustices is, you watch social media and all you see is, people who are 25 turning you on to the next greatest, get rich quick scheme or scam, and rather than spending time to learn how you can do it slow and low and actually have it be manageable, you're out there trying, putting things at risk that shouldn't be at risk really young in your life, and for nothing, for somebody on social media. Well, Scott here is with us to kind of talk about some few things. And actually, one of these things kind of fits in what we were just talking about there. It's about chasing. And it says, if you don't own NVIDIA, don't chase. And I don't know really exactly what you mean about that. I'm guessing you mean don't chase the latest financial trend and look for that to save you?
Yeah, if I had $1 for everybody who's mentioned the stock NVIDIA to me over the last 6 weeks, I'd be a wealthy man. The reality is that there's always a glamour stock, whether it was Microsoft 40 years ago or Apple 30 years ago or NVIDIA today, or whether it was Bitcoin or Ethereum or, some .com stock back in the late 90s, early 2000s. There's always something that gets people's attention. People get preoccupied with it because it seems like it can't miss, like a stock like NVIDIA that's just blown it out. I mean, people who bought it a year ago are really happy, as well they should be. It was a good purchase for them. But to buy a stock after it's run 150, 200% and is trading at 80 times earnings, which is literally 4 times the market, it doesn't make a whole lot of sense to me. I'm not telling you to or not to buy the stock because I still think it's a great company. But you have to say to yourself, am I going to put a bunch of money in something whose day may have already come and gone? It's because you feel left out. People feel that they hate to hear, I think it was Charlie Munger said, greed doesn't drive people's finances. Envy drives their finances. So when you hear your buddy or the gal next door say, hey, I bought NVIDIA at 65 and it's $800, you're like, whoa, that's impressive. And I feel bad for some reason, right? You don't say, well, good for you. You're like, you go home and you kick the dog because you're like, why didn't I buy NVIDIA at $65? But there's zillions of those stories out there. And what happens to most people, they get in late and then they get their brains beat in because they chase something. Rather than saying, this is my process, I save, I buy these 10 stocks, or I buy these mutual funds, or I buy these ETFs, and over the next 30 years, I'm going to accumulate $1 million. They go, I want to put 10 grand into NVIDIA and hope it turns into $1 million, right? And I'm telling you that did happen for some people over the last 5 or 6 years, but it's probably not going to happen for you.
It's peaked.
I don't know that it's peaked. I couldn't say that it's peaked. I would be lying if I told you I knew whether it's peaked or not. It might go to $1,500 for all I know. What I do know is at some point gravity is going to take over and mean reversion is going to occur. And some of the people who are chasing this stock are going to get their teeth kicked in.
Yeah.
And I mean, the people that bought it a year ago or 5 years ago, good for you. I applaud you. I'm happy for you. I think it's wonderful. You better have a process for taking profits when it makes sense. But at the end of the day, again, it's like when Bitcoin shot up, 80% of the people who bought Bitcoin bought it after it had already gone up to $40,000 or $50,000, right?
Right.
And most of them have gotten their teeth kicked in, if not higher, in fact. So don't do this with NVIDIA. Again, I'm not advocating to buy the stock, and I'm not advocating not to buy the stock or sell it. What I'm saying is don't chase any stock that is run up 100, 200, 400, 500% in a short amount of time thinking it's going to do that again, because it's unlikely.
Scott, can I ask you, because this is really, I am a blue chipper kind of guy. I don't really play this game very much. Is this, and this is one of those things where you're just basically, if you've heard out of it, by the time you hear about it, it's already too late?
For most people, yes. I mean, I think if you're chasing headlines, if somebody said to you again, Bitcoin was at 60,000 and you're like, all right, I mean, it's done really well. Something having done well does not mean anything going forward, right? People use recency bias. They say, well, NVIDIA and Amazon have done really well in the past. In the most recent past, in my mind, they are good stocks because they did well yesterday, last week, or last month. Therefore, they will do well tomorrow, next week, and next month. That is, nothing could be further from the truth. You're fooling yourself if you think there's a pattern there.
Yeah. Let me ask you a quick question because somebody just texted something in, which has been a running joke on the show for a while. How often do you buy a stock or a company just because you feel you know what that market is going to provide? And I'll give you some context here. I talked a few years ago, and I said on the air, I think that if you bought Beyond Meat right now, Beyond Meat, the vegetarian or the vegetable-based protein that looks like hamburger meat, I felt that. I just got this gut feeling. I said, I should probably buy a bunch of this right now because I get the feeling that trend-wise, this is eventually going to have to wind up in a fast food restaurant because someone's going to take a shot at this to see if it sticks. And one of these guys is going to take a chance. And it turned out Burger King turned out to be the first restaurant I remember that took a shot at this and used Beyond Meat. Their stock went from $5 to whatever it is now. Somebody just texted and said it's up 80% today. And I have kicked myself in the ass perpetually now for the last 5 years for not being involved because I'm not being dead honest with you here. It could have been a game-changing amount of money there. But in that same sense, the trend is already gone. It's already gone through a roller coaster ride. But do you ever do that? Do you ever if you know something about something inside, you kind of get that feeling. Do you use that, or do you always lean on expertise when you make purchases of that nature?
I never buy on gut feelings. I have a process for my personal wealth. I have a process for buying quality stocks that I believe are going to. First of all, I don't buy stocks. I buy companies, right? If you approach something as I'm buying a company rather than a stock, so if a company like NVIDIA. I am by no means saying it's not a great company. It's a fantastic company, and they do fantastic things, and they have the market cornered on microchips. So, of course, it's a great company. The question, in fact, somebody asked me a question recently, should I buy it? And I said, well, is it more than 20% of your net worth? No. Okay, as long as you're not getting too overextended. Do you believe NVIDIA is going to be around in 5 or 10 years and still be a profitable company? Yes. Okay, then sure, put some money in the stock. But if you're buying it because you think it's going to double again, I think you're making a mistake. I do not do that. I will tell you very honestly, I am terrible at predicting short-term gyrations of stocks. Terrible at predicting what Bitcoin's going to do, terrible at deciding which is going to be the next NVIDIA and which is going to be the next dud. I am bad at that. What I'm awesome at is predicting what the next 10 or 20 years look like for capitalism, stock markets, and quality companies. I'm very good at that.
See, and again, that's kind of what I'm like. I get that gut feeling. It's like you feel like an ass for not kind of moving that way. But then you kind of look and go, well, maybe the analytics don't say that. All right, let's move on to the next thing because we only have a little bit of time left. And I want to make sure to get to this because I'm actually kind of interested in this. You said you don't, quote unquote, win at life. Health, finances, or marriage, you survive and get better at it all. And actually, as I started thinking about that statement, you're 100% right. As you go through the dryer cycle of life and as you tumble around and get your face kicked in, you kind of learn how not to do that again. But you use the word win, which kind of confused me a little bit. What do you mean by you don't win at life like that?
Well, I think we can draw a line between what we just talked about and what we're now talking about. NVIDIA, people are trying to win. If my net worth is 20 grand and I'm trying to accumulate a lot of money because I feel like I'm behind, I can take 20 grand and turn it into 200 grand by buying NVIDIA. That's the thought people have. They're trying to win at that trade, right? You don't win at trades. You don't win at life. You don't win at marriage, right? You could argue with your wife about who's going to wash the dishes, right? And you could win the argument. And you could win that argument maybe once or twice. By the third time you win that argument, you're going to be washing the dishes by yourself and doing everything else by yourself, right? Because you don't win at marriage, you survive at marriage, you grow together. The same is true of money, right? If you say, hey, I'm not trying to win with a stock trade, I'm trying to accumulate assets, right? Because back to your point, you're kind of kicking yourself in the ass using your words about the trade with Beyond Meat. But I could tell you 1,000 stories of things I could have done. I could have bought Microsoft at the IPO. I could have bought Apple when it first came out. I could have bought, and the list goes on and on and on and on and on. I could have bought a piece of real estate in downtown Winter Park in 1974, right? I could have done all those things, but I did none of them. Yet, the things that I did do with high probabilities of success have worked out so that I am a fairly comfortable human being when it comes to finances. So people are trying to win. They're trying to, hey, I did this stock trade and now I'm rich. The probabilities of that are so low. It's like the probability of buying Bitcoin and having it go from 50,000 to 5 million. It's not impossible, but the probability is about 2%, 1%. The probability of you saving $500 a month for the next 30 years and becoming a millionaire, the probability of that at 4 or 5 or 6% is 99%. So people are bad at probabilities because the possibility of a win is always in their face.
And the patience thing gets them after a while too, right? Because, I mean, like you said, you feel like you have to win. You feel like you're not doing anything. And I think, again, that's another one of those things. I feel like people believe that they have to be perpetually active with their finances to really have it work. And in reality, I have found it's the exact opposite of that. The one thing you have to do is kind of leave it alone. You know, it's like cooking a perfect steak, right? You put it in the hot pan and then you walk away for a minute. You don't move it. You don't do anything. Let the thing do its job, and then you'll have exactly what you want.
Yeah, Albert Einstein said that there's smart, genius, and simple in that order, right? You could be smart, you could even be a genius, but once you make something simple is when you've really done something.
Wow, awesome. Well, buddy, listen, as always, we appreciate your time. And if you wanted to get involved with more of these seminars, it's edgewaterfamilywealth.com. And the next one is the 27th of this month?
March.
Yeah, it's March 27th is the next one we have availability in. And I got to tell you, that one's filling up quick. So give us a shout on edgewaterfamilywealth.com. There's a sign-up sheet. And, of course, my book and the other books are available there as well.
And, again, it costs nothing to go to this. What you could get out of it could change your life, and you're welcome to go when you can. So, again, book that. It's March 27th. There are slots open. No cost. It's at Ruth Chris. Go to edgewaterfamilywealth.com. Learn all about that. And like Scott said, I got a couple books over there, and you may want to grab one of those, even though you look at the name of it, and it's not going to want to make you buy it because it says, I've never made anybody a millionaire. But you have to listen to the words. It's good. Scott, as always, thank you, buddy. We appreciate your time, and drive safe and travel safe.
All right. We'll see you guys next week.
You got a good one.
Yay! Keep those blades on.